Hi guys, welcome. In this video today we're going to go through this week's breakdown, the results, and more interestingly how to use the currency correlation to your advantage to increase the probability of your trade working out. And I'll show you some examples as well in this video, how to use it, when to use it, and when to use it not to take a trade and when to use it to take a trade and add to your probabilities. Let's begin with the week. What we've had this week, of course, is NFP week. So we had some interesting price action as always with NFP. Let's begin with the dollar. What we were waiting for, the dollar, is this higher point here, which we have not reached yet. So there was no sell here. On the euro, we wanted to look at a buy of this level, and we did not reach there until the end of the week, NFP, and that is the case. We have not had that scenario play out, so there's no trade there. No, the scenario just didn't happen, just didn't work. So, nothing going on here. We just come into it, but not reacted off it, and NFP didn't really do much. Dollar CAD, also looking for this bullish momentum, bullish behavior. We did not have a break. We kind of consolidated, ranging movement, whatever you want to call it. And such is life. Nothing happened there. Euro yen was another one. Wanted to see a break here, higher to go higher. That did not happen. We had a breakdown. Again, I think it was the Bank of Japan intervention and news there, and that went lower. We were looking at this being the invalidation, and this scenario, second scenario, being this, a break lower, getting a better price and moving lower still, continuing. We have not had that yet because we have not had the better price up here, and we'd be looking at this sort of price to sell from, but that did not happen either, and we have not reached there. We just collapsed lower, and we're barely we're barely bouncing off this 155 level here. So nothing there either. Aussie yen, similar to euro yen, we wanted to break higher and continuing. That did not happen. We broke lower instead. Did not react off these levels. Did not have this scenario happen. So such is life, invalidated. We will maybe reassess next week. Please remember to click the like button and subscribe so you can get these regularly, and hopefully this will help you. I'm sure that as you go along, if you look back at some of the other videos, you may be learning a few things. Aussie CAD, another scenario. This was an interesting one because we looked at this lower price, asking ourselves where's the market going to go, or the higher price. What we ended up with is this break of the structure here. We are now come back into a better price, and it looks interesting now. But the issue is that we are at the end of the week, reaching into the weekend, and it would have been interesting, but again, the weekend is an issue because we've got gaps and the price is not quite moving at the moment either. So it's a bit suspicious. If we're not moving, if we're not doing anything, then we don't want to be involved because, well, the probabilities are low. Would have been looked interesting otherwise if it was, say, the middle of the week. But for now, kind of have to let this one go. So another, unfortunately, fortunately or unfortunately, another one that we have to leave out. But we'll come back to this one in a bit towards the end of the video, and I'll show you why. Aussie New Zealand, now the ever interesting Aussie New Zealand that we've been looking at. We wanted to see a turnaround, which it seems that we are now having this turnaround, very big bullish momentum to continue to the upside, which is what we wanted to see. And we want to see a break of this level, which is what we're having. But again, we just had it at the end of the tail end of the week, which is not really what we want to see. Let's see what happens next week. We have this level developing here, and we'll reassess and then come back to it on Monday. For now, again, we did not push higher, did not have a break of significant structures to the left, and therefore not interested at the moment. Yeah, the weekend is an issue. Let's see how the week closes. Okay, and lastly, we have S&P 500, US 500, again, wanted to see a break of this high up here. We just wicked through it, and we did not go right through it to give us a better price and then continue higher. Instead, we collapsed downwards and invalidated the whole setup, which means that we just neglect it. There was a scenario B to go lower, come back and get a better price. However, we just went lower and then went straight up. We did not break through and go down into these levels. Instead, the market just chopped around. Unclear, choppy behavior, just as you think that it's invalidating the setup. If you have a look on the daily, as you can see, we have not closed below. And generally, the daily picture, as I was saying earlier in the week, is the one to give us the clues. Go back here to the 4-hour. You can see, try to move lower, but we just headed right back higher. Did not give us that clean move lower to then get a possible engagement with the market. So what's the result? Well, the end result is, we're coming back, that is the whole week. Summarize, the end result is 0 entries. And it's, yeah, I mean, this is what happens in December, you know, it's not really much of a surprise. Protecting our capital is a good thing, managing our risk is a good thing, so I wouldn't say that this is a negative. Aussie CAD almost gave as a possible idea, possible setup, but this didn't happen. And we wait for more price action, we wait for the market to do its thing and then reassess. Next week will be the final week of the year. After that, the holiday period, we will have a bit of lessons, a bit of learning, but not analyzing the markets. Right then, let's move on to how to use currency correlation. So the lesson for today, how we're going to use currency correlation. And what is currency correlation? Well, if you're not familiar with it, let me just tell you briefly. We can now get rid of the news from previous week. Let's go over currency correlation and talk about what does it mean and how do we use it. Right, so let's look at what currency correlation is. Just quite simply by its name, it means when you have one chart, one market moving in one way, then you have another market which is closely correlated, meaning it moves in similar fashion. If you take the white here, this white graph, and that is, let's say that is one market, and then the green one is another market. As you can see, both of them are closely correlated. So if you overlap them together, you will see that they move pretty much the same, pretty much in sync, in correlation. As one moves down, the other, so does the other. As one turns around, moves up, so does the other. And they are correlated. You never get 100% match, but you will get something that's very close. Then here we've got opposite correlation or inverse correlation. That means as one moves up, the other moves down. As one moves down, the other moves up. And they are linked but inversely linked. So you can expect that when one moves in one direction, you look at the other chart or the other pair, then you'll see that moves in the opposite direction. Now, how do we use this to our benefit? That's the main question. I'm sure that's what you want to know. Well, first of all, if we have, for example, here on this white chart, just increase it. If we have a idea to sell, what we want to see is the market on the other pair, the other chart, also in a sell mode. And we don't want to see it go up. If it's doing the opposite, then we are not going to sell this white chart over here. If we see the green one selling, because if that one is selling, then they should both be moving in opposite direction. If they're moving in the same direction when it's similar, closely correlated. If they're not moving in the same direction, not doing the same thing, then that means something is up. And therefore, we don't want to take that risk. Now, same is true if you're looking at inversely correlated pairs. If you want to sell, for example, this red graph here, the chart here, then what you want is you see the white one, whatever pair that is, moving up, and you want to see it trending higher because we're inverse. Now you will have a fixed charts. Those are correlated and those are inversely correlated to look at. And if you take, for example, euro dollar, now euro dollar would be closely matched to pound dollar, and it will be inversely related to dollar Swiss. If you do not know which ones are correlated to which, you simply take one easy way to do it is, for example, here on Aussie CAD, what is Aussie closely linked to? New Zealand, and CAD is the same, and therefore Aussie CAD is closely linked to New Zealand CAD. Another example would be, let's say pound New Zealand. So pound New Zealand, what is the pair that is, what is the currency that's close to pound? Euro. So pound New Zealand would be closely correlated to Euro New Zealand. And that means if you take the pound New Zealand and you're looking to buy it, then you're looking for a buy on Euro New Zealand as well. You're looking for the market to be doing the same thing. If you're unsure, let me give you a resource to look at. So here is one resource you can look at. We've got the correlation chart here, correlation table on MyFX book. And you can see on the left, you've got the charts, and then it will show you, if you look along, you will see how closely correlated it is. Now, Aussie CAD, for example, is 92.8%, has 92.8% correlation with Aussie dollar, which means same direction. And then it has a negative correlation, for example, with Euro Aussie of 43%. So that's inverse, 43%. And what you want is, you really want a currency that's ideally 75 or 80% or above correlation, really, really high correlation, or inversely correlated. So less than 75% or 80%. So here, for example, we can put, let's say if we want less than 75%, we can put 75 to highlight, and we also want more than 75%, or you could say 80% if you want. And it will be highlighted here. And again, let's take Euro CAD. You can see that the highest correlation here is Euro Yen. So that's 91%, very, very high. Also very high would be, what else have we got here? So 86.5, so Euro dollar as well. And the red ones, you can see the inverse. If you ignore these exotic pairs, just take the main pairs, majors and minors that we have. Those will be your safe bets. All right, I'm sure you're asking yourself, how do we use this on the chart? So we're going to go through a few examples and a few scenarios. So first of all, I'm going to go through Euro dollar and pound dollar. So those are the two closely correlated ones to each other. And then Euro dollar and dollar Swiss, which are inverse. So let's bring up a few examples and I'll show you what it looks like. Let's look at this scenario on the euro dollar, and this is from this week. So I will move that. I have the euro dollar here on the left, and I have pound dollar here on the right. If we look at euro dollar, and we look at this level, and let's say, for example, if I just rewind this, we are looking at this time. So let's just put a line here. So this is the time. And if I just copy it onto the right hand side, this is the same time. So this blue line represents the same time that we looked at euro dollar. Now let's say, for example, you were looking at this structure to have broken, when what you wanted to see is, just for argument's sake, this is not an actual trade, but as an example, what you wanted to see was that you wanted the market to come down lower, for example, and then continue higher. So this was, let's say that this was your idea, and because it broke the structure to the left, if you look at the euro chart here, and it went higher, had this momentum, you wanted to get in and continue on buy. Now, just as a example, right? Let's say that that is what you wanted to see. So if we're looking at, for example, here, the euro is doing this, broken, come down, and we want to see it higher. We want to see the same pattern happen on the pound. So if I copy this over, right, we want to see the same thing happening in the pound. And what do we see at this time happening on the pound? Well, we can see this low, which is the same as this low. And here we have a break of the previous high with this candle. And what do we see on the pound? We do not have a break higher. So let me just point that out to you so it's very clear. We have this high, which broke higher. And in this case, we do not have a high. In fact, it is lower. What does that tell us? That tells us that if these two are correlated, why would the dollar be heading lower and the euro is not? Now, the pound dollar should be heading higher too, in order for it to confirm, so to speak, that this euro trade is also a good one. And as you can see, it is doing different things. It is different. This should also be breaking higher. Pound should also be breaking higher. And right now it is not, which makes this idea lower probability. Okay? So that is the first situation, the first scenario, and the first way that you can look at correlation. So in this case, euro dollar, we're wanting to trade the euro dollar. We're looking at an entry, and now we're using the correlated pair, which is pound dollar. Let's look at another example. So in this example, we are taking the inversely correlated pair. So we've got euro to the left and dollar Swiss to the right. Now again, if we wanted to buy the euro dollar, we have this price action going on. And if I take this and I copy it over here, what we want to see is if I can now right click, and basically it would be the inverse, the opposite, right? So if I do the opposite, what we want to see is not a higher high, but instead what we want to see is a lower low, right? Because we want to see the inverse. So here it's higher, going higher, and what we want to see is an inverse. We want to see it going lower. However, as you can tell, that was not the case. Here we have a higher high. It went higher. It did not do this. It did not go lower. It went higher, right? It went higher. So seeing as it went higher when it should do the opposite, it should go lower. Therefore, that again shows you that something is not quite, possibly not quite high probability. Now, another scenario, let's say, for example, you were tempted to enter a buy right here on the level, and you wanted to buy the euro. If you want to buy the euro, again, what do you want to see? You want to see dollar Swiss move lower. And at dollar Swiss being inversely correlated move lower. But what happened here on the right hand side, as you can see once again, yet again, it went higher. That's not what we want to see. We wanted to see dollar Swiss do this. It should break previous lows and be doing that rather than going higher. So again, that is when to avoid it. All right, so let's go through another example. Here we have the example of pound yen on the left side, which is what we're looking to trade, and we've got euro yen on the right side. So pound yen, pound dollar matches with euro dollar, so pound yen will be matching with euro yen in terms of correlation. So again, let's say, for example, we had this low, we went higher, we came back down, and at this moment in time, if I just replay it, let's say we're here, and we're looking for our level, and we're thinking about entering a buy, or you're considering that buy scenario. Now the question is this high probability? What do I want to see to have high probability? Well, if I'm going to buy, but I'm not sure, that it's a bit choppy, I don't know, but I'm looking at a buy. Then go over to Euro Yen and see, right, what is happening on Euro Yen? Are we having confirmations? Are we having the same thing happen? And what do we want to see on Euro Yen? Well, we want to see the market heading higher. We want to see it breaking higher. So if you've got this choppiness right here and you're not sure, then you really want to see momentum. You want to see movement on the Euro Yen. So Euro Yen will give you a clue to this idea. So let's have a look what is happening on Euro Yen at that time. Well, at this time, you can see that we have broken higher. It's a bit weaker price action on the pound yen, but on the Euro Yen, we have these big bullish candles at the same time. So same thing happening here. We've got this low, headed higher, broke the structure, retraced, and now we're continuing to the upside. So that is the idea. And Euro Yen is showing you that, yes, intending to go higher. And then we can switch back and we've got our scenario here. That's the idea. It may be that pound yen will head lower still. We never know, especially with news. It's not a definite. It's not a certainty. Nothing is a certainty. But it's almost like Euro yen is given a clue, a pulling up. It's a it's a correlated pair to the same direction. So that is when you do have a positive correlation and a positive sign, a positive clue for when to enter. Let's look at another one. All right, I said earlier in the video, I'll come back to Aussie CAD, and here we are, and I'll show you why. So this is real live conditions right now as we speak. Let's look at this again. Everything looks great here on Aussie CAD so far, according to the scenario we played out and what we planned. What do we plan? Well, we planned this break, we planned this retracement to get a better price. Here we have our interesting level, and then we want to buy it. Or the idea was that the high probability scenario was that it's more biased to the upside. Now, technically speaking, that is a scenario. That is what we want to see. And how would we look at it? Well, if we have Aussie CAD, then what would we look at? Can you guess? New Zealand CAD. Now, what do we want to see on New Zealand CAD? Well, we want to see the same thing. So we will have some kind of this swing. The swing is broken, retraced, and now we're asking ourselves what's going to happen there. So that is the same scenario we want to see on New Zealand CAD, right? Same thing. Now, the question is it doing the same thing or is it not doing the same thing? If it is, and we've got the same picture, okay. If it's not, then we'd have to be careful and we can say, okay, our probabilities are now more likely to be reduced. So let's see, what do we actually have? Well, we have the low over here. We have the high being broken through structures here to the left, 1, 2, and probably 3. And then what do we see? At the same time, nope, negative. We have a low being broken. So this low that has been held here with where the market is currently right now as we speak live and where we are here, the New Zealand CAD said no mas. It's broken. Therefore, the probabilities now on Aussie CAD here are reduced. And we may have something else going on that we're not aware of. So we have to zoom out and reassess and look at the picture again. And this is, as you can see, live example, how you can use the currency correlation to your advantage. But of course, you need to have a plan. You need to know where you're going. This is like an extra step for you. It's not a way to trade. It's not a strategy. It is just a little extra factor. It doesn't mean that the Aussie CAD trade won't work out. It doesn't mean that it will or won't or will do anything. We have no idea. But the point is just to add some more strength and just generally strength to the setup. Of course, the better quality it is, the more the chances are that it over time, over a series of trades, it will be positive. Okay, that's it for this week. And next week will be the final week for December. Hope you guys learned something from this video. It's useful. And my name is Dima. I will see you on Monday for more weekly analysis of what we've got going on in the markets and the opportunities. All right, bye for now and have a good weekend.